Yes, welcome to the fourth review session. This test was on the chapters Trial Balance and Rectification of Errors. Before I start reviewing the questions, I'll just give you a brief introduction on what these chapters are. I'll just give you a brief about what a trial balance is and uh, give you an idea of what are the different types of errors and how do we rectify these errors, right? So trial balance is a statement which is prepared as at a particular date. It lists out the various debit and the credit balances, and if the books of accounts have been maintained, or rather if the accounts have been maintained mm, arithmetically in an arithmetically accurate way, then the debit column and the credit column should match, right? And so this trial balance is not an account, it is a statement, and it's quite possible that the debit column does not match with the credit column, and in that case, what do? We place the difference in an account called the suspense account. It's an account which we are all really fond of, and if the debit column is greater than the total of the credit column, we would be placing the difference in the credit column, and we would be calling it the suspense account, and vice versa. That is, if the credit column is greater than the debit column, the amount would be placed in the debit column, right? And this trial balance lists the balances of all accounts, all assets, liabilities, expenses, and incomes. So assets and expenses have debit balances, and liabilities, income, and capital have credit balances. And once the trial balance is prepared, if there's a suspense account, if the reasons for the differences are identified and rectified, and once a corrected trial balance is prepared, it helps us in preparing the balance sheet and the um, profit and loss account, right? So that's about trial balance in a nutshell. Now we'll look at errors and rectification of errors. So discussion of errors is it's a natural progression after a discussion of a trial balance, because it's quite likely that the trial balance does not agree, and we end up having a suspense account in the trial balance, and which leads us to find out the reasons for the difference, and in most cases it's because of certain errors that have happened while recording or posting various transactions. So error is an unintentional mistake. It's not like a fraud. A fraud is a, a graver error which is committed in order to, with an intention to defraud the user. So the intent is different in case of an error and a fraud. Errors can be broadly classified as two. You have errors of principle and clerical errors. So errors of principle means treating a revenue expenditure as a capital expenditure, or capital expenditure as a revenue expenditure. So what do we mean by revenue expenditure, capital expenditure? We'll be looking at it in the forthcoming review sessions. But for now, I'll give you an example. Let us say a machinery has been repaired. This repair is a revenue expenditure, but if this repair is treated as cost of machinery, for example, instead of debiting repairs account, the accountant debits machinery account, then it is an error of principle. What is the impact of this error of principle? Will the trial balance agree? Yes, the trial balance will agree, because instead of debiting one account, the debit has gone to another account. So the debit and the credit have been made of equal amounts, but it's just that the debit has gone to a wrong account. So the trial balance will agree, but there will be an impact on the profit, and there will be an impact on the asset balances. Because of having debited repairs to machinery, the accountant has inflated the asset position, and the net profit is also inflated. Because the repairs has not been charged to the profit and loss account, the profit is inflated to that extent, right? So that is an error of principle. Next we come to clerical errors. Clerical errors is a broad classification that can be further broken down as errors of omission, errors of commission, and compensating errors. So errors of omission means you either completely omit to record a transaction, or a transaction is omitted to be recorded partially. Okay, so you completely omit the when a transaction is completely omitted, then in that case it does not affect the trial balance, but however it will affect the either the asset or the liability position or the profit position. I'll give you an example for this. Suppose sales to Mohan has been completely omitted. Okay, then in that case we'll be understating our profit because we've not accounted for sales, and we'll also be understating the asset position. So in case of error of omission, a complete omission, the trial balance will agree, but it'll either impact the net profit or the asset and liability position, or both, depending upon the accounts that are involved. Right? Next, error of partial omission is where one leg of the transaction is accounted for while the other leg is omitted. For example, cash collected from a debtor is debited to the cash account, but it is omitted to be credited to the debtor's account, in which case the trial balance will not agree. The difference will have to be temporarily kept in an account called a suspense account, and uh, we'll have to find out the reason for the difference, and the suspense account will have to be reversed. So the rectification entry will be suspense account debit to debtor, and after passing this entry the trial balance will agree without the suspense account. Right? So now that I have touched upon suspense account, we must understand that the suspense account is a temporary account. It is an account in which the difference in the trial balance is parked temporarily. It is the duty of the accountant to find out the reasons for the difference. The suspense account can be an outcome of various errors involving all kinds of accounts: nominal accounts, real accounts, personal accounts. So it is like a hodgepodge of many errors. So once all these errors are identified, the balance in the suspense account will keep reducing, and it has to be brought to nil so that the trial balance tallies automatically. But in some cases, if errors are not, even after sufficient investigation, or even after sufficient effort, it is difficult for the accountant to identify the errors, then in that case, if the suspense account shows a debit balance, it will be shown in the balance sheet as an asset, and if the suspense account shows a credit balance, it will be shown in the balance sheet as a liability. But however, it is not permitted to show the suspense account in the books of accounts for eternity. It is binding upon the duty of the accountant to identify the errors that have resulted in the suspense account and rectify them at the earliest. Now the second type of clerical error is error of commission. Error of commission would mean error in totaling, error in posting, transposition errors. That is, instead of posting 649, posting it as 694. So these are all errors of commission. Errors of commission, if it affects only one account, will definitely impact the trial balance, and there will be an impact, a consequent impact on the gross profit or the assets. So what we must keep in mind when we solve problems in this chapter is that for every error that is given to us in the problem, we must know whether it impacts the trial balance. Then, if it impacts the trial balance, then we must know that we have to park the difference in a suspense account, and then we must pass the rectification entry so that we close the suspense account. Okay, and for every error, we must know what is the impact on the gross profit or net profit, and what is the impact on the net asset position of the business. So this should be our thought process when we are solving problems in this chapter. Right. So with this brief background, let us look at the various questions. The first question is: the trial balance checks the honesty of the bookkeeper, the honesty of the accountant, the honesty of the cashier, the arithmetical accuracy of the books of accounts. Right? So the trial balance is prepared not to check anybody's honesty, it is prepared to check the arithmetical accuracy of the books of accounts. A trial balance will not reveal errors on account of wrong balancing, errors on account of wrong carrying forward, errors on account of wrong casting, errors of principle. Okay, a trial balance will not reveal errors of principle, because as I told you, instead of debiting one account, a debit of an equal amount has gone to another account. So the trial balance will still agree even if there are errors of principle. So answer is D. A trial balance will not reveal errors on account of wrong balancing, errors on account of wrong carrying forward, errors on account of wrong casting, posting of wrong account on correct side with correct amount. Yes. So A, B and C are errors that will be revealed. Okay, the errors, the trial balance will reveal these errors, but if a wrong account has been used, that is, let us say, instead of let us say a furniture has been purchased, but instead of debiting the furniture, a machinery account has been debited. So the correct amount has gone to the correct side, but it has gone to a wrong account, but that will not affect the trial balance. Okay, the furniture account will be understated, the machinery account will be overstated, that's all, but the trial balance will still agree. So a trial balance will not reveal such errors. So answer is D. A trial balance will reveal errors of principle, compensating errors, errors of complete omission, posting to wrong account on correct side with wrong amount. Right? A is not correct because a trial balance will not reveal errors of principle. B, compensating errors. Compensating errors is, error means one error compensates the other. For example, if we have understated an expense of 10,000 rupees, but we have overstated an asset of 10,000 rupees, then one error compensates the other, and the trial balance will not reveal such an error. Then error of complete omission, yes, the transaction is not brought into books at all, and hence trial balance will still agree. D is posting to wrong account on correct side with wrong amount. Okay, so let us say machinery has been purchased for 10,000 rupees, but furniture account has been debited. Furniture account has been debited with 9,000 rupees. So here the account is wrong, but it is on the correct side, but the amount is wrong. So when one side, when the debit is wrong, but the credit is for 10,000 rupees and the debit is for 9,000 rupees, your credit side is overstated by 1,000 rupees, and hence the trial balance will not agree. So the trial balance will reveal such errors. Answer is D. Which of the following will generally show a debit balance? Capital account has a credit balance. Bank loan is a liability, it has a credit balance. Bank charges is an expense, and so it will show a debit balance. And discount received is an income, and hence it will show a credit balance. So answer is C. Errors of principle do not allow correct totaling of the balance sheet, correct totaling of the trial balance to agree, none of these. Well, errors of principle, because of an error of principle, balance sheet will agree, trial balance will agree, and hence the answer is none of these. Next question. Which of the following errors is an error of principle? Rupees 600 received from Ganpat has been debited to his account. So this is an error of commission. So instead of crediting Ganpat, he has been debited. So it is an error of commission. Purchase of 2,000 has been entered in the sales journal. This again is an error of commission. It is being entered in the wrong subsidiary book. Repairs to building have been debited to building account. This is an error of principle because a revenue expenditure has been treated as a capital expenditure. So answer is C. Purchase of office furniture for rupees 6,000 has been debited to general expenses account. Right, so here we have a capital expenditure has been treated as a revenue expenditure. It is an error of principle. Such errors of principle have to be rectified by debiting the furniture and crediting general expenses. So the wrong debit has gone to general expenses, so we have to credit it, and office furniture has not been debited, so we have to debit it now. So answer is office furniture account debit to general expenses account. Question number 9. Which of the following errors will not affect the trial balance? Okay. Omission of an account from the trial balance will definitely affect the trial balance. The trial balance will not agree. Entering the balance of an account in the wrong amount column of the trial balance. Yes, it will. Suppose we enter the debit, suppose debtors is being entered on the credit column. Definitely the trial balance will not agree. Wrong totaling of the trial balance, yes, it will affect the trial balance. Wrong recording in journal proper, but it is not posted at all. So here a recording has happened in the journal proper, but it is not posted at all in the ledger. So in the source itself there is an error, and that is not posted at all. So trial balance will still agree. So answer is D. Question number 10. Which of the following errors will affect the trial balance? Wrong recording in purchase book and posted accordingly. Wrong recording in journal proper but not posted at all. Correct recording in sales book but not posted. Okay, then errors of posting involving the posting to wrong account on correct side with correct amount. Okay, so the question is, what are the errors that will affect the trial balance? That is, errors which will lead to a difference in the trial balance. Option A is wrong recording in purchase book and posted accordingly. So though the amount has been wrongly recorded in the purchase book, it has been posted in both the accounts, that is the purchases account and the creditors account, and hence the trial balance will not be affected. Wrong recording in journal proper, but it is not posted at all. So this is an error of complete omission of posting. Though it has been recorded, posting has not happened, so it will not affect the trial balance. Correct recording in sales book, but it is not posted. Okay, so here what has happened is, well, that's the answer. It will affect the trial balance. Though it has been recorded in the sales book, it is not posted means it has not been posted to the debtors account. The entry has gone to the sales account. So it will affect the trial balance. Option D is errors of posting involving the posting to wrong account on correct side with correct amount. So the amount has been posted, a correct amount has been posted to the correct side, but it has been posted to the wrong account. So this will not affect the trial balance. So answer is C. Next, which of the following errors will affect the trial balance? Option A, a credit sale of goods to X rupees 17 has been posted as rupees 71. So when a credit sale of goods is made to X for rupees 17, the entry is first made in the sales day book, from which entry is made to the sales account. Individual entry made based on the invoice is made to the account of X. So here the entry has been made in the account of X as rupees 71, but it has been recorded as 17 in the sales account. So this is the error which will affect the trial balance. If you look at option B, it says cash sale of goods to X rupees 17 credited to X. Okay, so instead of crediting sales account, X has been credited. So this is an error of commission. It's only a wrong account that has been credited. Trial balance will still agree. A credit sale of furniture to X has been posted as rupees 71. So this error has happened in both the accounts. Both the accounts have been posted with the wrong amount of 71, and hence trial balance will not be affected. So the answer is A. Next, question number 12. In case the individual ledger accounts were accurate in all respects, but a trial balance did not tally, there may be wrong recording in books of original entry, wrong recording in journal proper but not posted at all, errors of posting involving the posting to wrong account on credits on correct side with correct amount, omission of an account from trial balance, right? A, B and C will not affect the trial balance because A is where you're making a wrong recording in the books of original entry. So from there, that is the source. The error is in the source itself. So the trial balance will agree. You make an entry in the journal proper but you don't post it at all. Then again, trial balance will agree. C, only a wrong account has been posted, that is the amount is correct and the side is also correct, so in that case also trial balance will agree. But in case of D, where you omit an account from the trial balance, it will not agree. Answer is D. Question number 13. The object of opening suspense account is to tally the trial balance, to avoid the delay in the preparation of financial statements, to rectify the errors, none of these. See, the object of opening a suspense account is to avoid delay in preparation of financial statements. So answer is B. A debit balance rupees 5,000 of Ram, a debtor, entered as a credit balance of 500 in the trial balance. So trial balance will not agree. Okay, and the options are, what are we supposed to do now? Rectifying entry is not required to be passed. Rectifying entry is required to be passed and posted in all the affected accounts. Posting is required in all the affected accounts. Rectifying entry is required to be passed, but no posting in the ledger is required in case of Ram. None of the above. Yeah, so the answer to this is C, because instead of putting 5,000 in the debit column, 500 has been put in the credit column. So all we have to do is put 5,000, remove 500 from the credit column and put 5,000 in the debit column. So there's no posting that is required in the ledger in order to rectify this error. So answer is C. On purchase of old furniture, 3,000 rupees spent on its repairs should be debited to the furniture account, because we need these repairs to be done on this old furniture so that it can be put to its intended use, and hence it is to be treated as a capital expenditure and not a revenue expenditure. So answer is B. Question number 16. Goods costing rupees 10,000 taken by the proprietor for personal use were not recorded. This error is an error of commission. It will affect the trial balance, will not affect the net profit, none of the above. Right? See, this is not an error of commission, it is an error of omission because it has not been recorded at all. It will not affect the trial balance because it is an error of omission. It is wrong to say that it will not affect the net profit, because yes, it will affect the net profit. The entry that we pass when goods are taken by the proprietor for personal use is drawings account debit to purchases. If we pass the entry, net profit will be overstated. By not passing this entry, net profit has been understated. So the answer is D, none of the above. Goods costing rupees 10,000 distributed as free samples were not recorded. The error will result in, okay, so is this an error of commission? No, it is an error of omission. It will not affect the trial balance. Then option C, it says will not affect the net profit. Yes, it will affect the net profit. Okay, so showing goods as free samples, it is an advertisement expenditure. So by not showing this, the net profit has been overstated. And so the error, the answer to this question is D, none of these. Goods costing 10,000 rupees given as charity were not recorded. This is an error of omission. B, will affect the trial balance. No, it will not affect the trial balance. Will not affect the net profit. No, it will affect the net profit. And so the answer is D, none of the above. Goods costing rupees 10,000 were destroyed by fire were not recorded. So this is similar to the other questions. The error, it's not an error of commission. It will not affect the trial balance. It will affect the net profit. And so the answer is D, none of the above. Goods costing rupees 10,000 taken by the proprietor for personal use should be credited to the purchases account. So the entry that is to be passed is drawings account debit to purchases. Goods costing rupees 10,000 destroyed by fire, okay, should be, it's not free sample, it should be fire, it should be credited to the purchases account. Similarly, when you give goods as charity, it has to be credited to the purchases account. Entry will be charity account debit or miscellaneous expenditure account debit to purchases account. Goods costing rupees 10,000 destroyed by fire. Yes, the entry will be goods lost by fire account debit to purchases account. Goods costing rupees 10,000 taken by the proprietors for personal use were credited to the sales account. Okay. See, so the correct entry for this should be drawings account debit to purchases, but instead the entry that has been passed is drawings account debit to sales. So there is a wrong credit to sales account, so we have to debit the sales account and we have to credit purchases account. So entry will be sales account debit to purchases account. Option is C. Goods costing rupees 10,000 distributed as free samples were credited to sales account. So the entry should have been free samples account debit to purchases account. Instead, it has been credited to sales account. So there is a wrong credit. We have to debit, and the account that should be credited but has not been credited should be credited now. So the entry will be sales account debit to purchases account. Rupees 10,000 paid in cash for installation of a new machine were debited to installation expenses account. The correct entry should have been machinery account debit to cash, but the wrong entry is installation expenses to cash. So the rectification entry will be machinery account debit to installation expenses account. So the answer is C. Sale of office furniture should be credited to the furniture account. The entry will be cash account debit to furniture, and in case there's a profit or loss, a separate entry needs to be passed for that. We'll not be using the sales account for this because sales account is used only in case of sales of goods that are stock in trade. Okay, so the answer is C, purchase account. I'm sorry, B, furniture account. I'm terribly sorry. It is B, furniture account. Next, sales of office furniture has been credited to sales account. This is an error of principle. So we have not been able to distinguish between sale of a capital item and sale of a revenue item. So this is an error of principle. A sale of office furniture credited to sales account. Is it an error of omission? No, it is an error of principle, as we just saw. Will it affect the trial balance? It will not affect the trial balance because instead of crediting one account, the credit has gone to another account of the same amount. So it will not affect the trial balance. Will not affect the profit? Wrong. It will definitely affect the profit because we'll be overstating the profit because we've credited the sales account. We are showing more revenue, and so we'll be overstating the profit because of this error. And so the answer is none of these. Next, question number 30. A cash purchase of goods for proprietor's personal use should be credited to. Okay, so a cash purchase of goods for proprietor's personal use. The answer is drawings account debit to cash. So he is purchasing goods using the business cash, and it's not a withdrawal of goods. He is using the business cash in order to purchase goods, and so the drawing should be debited and cash account should be credited. So answer is D. Rupees 1,000 received in cash from X, whose account was written off as a bad debt, has been credited to X's account. Right. So the correct entry should be cash account debit to bad debts recovered account. But the entry that has been passed is cash account debit to X's account. So the rectification entry is we have to debit X and credit bad debts recovered account. So entry is X account debit to bad debts recovered account. Next, question number 32. Cash sales of rupees 143 to Meena has been omitted to be posted. Okay, omitted to be posted means it has been omitted to be posted to Meena's account. It's not an error of complete omission, it is an error of partial omission. It will affect the trial balance. Trial balance will not agree. It will not affect the profit. Right? So answer is D, none of the above. Okay, let's go to question number 33. Both the discount columns of the cash book were omitted to be posted in the ledger. Okay. Is this an error of complete omission? No, it is not an error of complete omission. It is an error of partial omission. It will not affect the trial balance. It will affect the trial balance because only one leg of the transactions have not been posted. That is, the discount received has not been posted to the discount received account, and the discount allowed has not been posted to the discount allowed account. It will not affect the profit. It will affect the profit because discount allowed has the impact of reducing the profit, and discount received has the impact of increasing the profit. So if we do not record for these transactions, it will definitely have an impact on the profit. So answer is none of these. Right? Next, question number 34. Rent paid to landlord Ram has been debited to his account. Okay. So this is an error of commission. It has been debited to the wrong account. Instead of debiting rent account, Ram account has been debited. Option B will not affect the trial balance. Yes, it will not affect the trial balance. Will not affect the profit. It will I think there is an error in this question. Right, let's go to question number 35. Question number 35. Sales to Meena rupees 143 has been omitted to be recorded. Okay. See, okay, so here the transaction has been omitted to be recorded in the subsidiary book itself. So the error is in the source, and hence it will not affect the trial balance. It's an error of complete omission. It will not affect the profit. None of these. So answer is will not affect the trial balance because it will affect the profit because sales has been omitted and the profit will be understated because of this error. So the statement saying that it will not affect the trial balance is the correct statement. So answer is B. Sales to Meena of 143 has been recorded in the sales returns book. Okay. So again, this is an error in the source itself. This is an error in the book of prime entry, and this error is okay. The statement is this an error of complete omission? It's not an error of complete omission. Second, it will not affect the trial balance. Yes, it will not affect the trial balance because the error has been made in the source itself. So B is the correct statement. It will not affect the profit is a wrong statement because it will definitely affect the profit. Sales is being shown as sales returns, hence revenue is not being recognized. In fact, revenue is being reduced. So it will definitely affect the profit. So answer is B. Sales to Meena 143 recorded in sales returns from Meena as 413. Okay. First statement is this an error of complete omission? No, it is not an error of it's not an error of omission at all. It's actually an error of commission. It will not affect the trial balance. That is the right statement, yes, because instead of recording in the sales book, it has been recorded in the sales returns book. So the error is in the source itself, and so it will not affect the trial balance. Will not affect the profit is a wrong statement because it will definitely affect the profit, because sales of 143 has not been recorded. Instead, negative sales of 413 has been recorded, which will have an impact on the profit. So the answer is B. Goods returned to X for rupees 10,000 passed through the purchases book. What impact will this error have on the gross profit? When goods are returned to X, it is sales returns, sorry, it is purchases returns, but it has been shown as purchases. So once the entry is made in the purchases book, it will go to the purchases account and it will increase the purchase cost, which will decrease our profit. So the answer is B, decrease in gross profit. Goods returned by Y for rupees 10,000 passed through the sales book. Okay, so this is sales returns. Sales returns has been shown in the sales book, which will have an impact of increasing the sales, which will in turn increase our gross profit. So this error will result in increase in gross profit. Question number 40. Goods returned by Y for rupees 10,000 passed through the purchase book. Okay, so this means sales returns has been shown as purchases. So there will be no impact because sales return has the impact of reducing the GP, and purchase also has the impact of reducing the gross profit, and hence this will have no impact on the gross profit. Question number 41. Goods returned by Y for rupees 10,000 passed through the purchase return book. Okay, so this is sales returns for rupees 10,000 has been shown as purchase returns. Okay, so this will have an impact on the gross profit. It will increase our gross profit because we are reducing our expenses by showing a sales return as a purchase return, and so it will have an impact on the gross profit. It will increase our GP. The errors referred to in question 38 to 41 are called errors of commission. Okay, because this is the transactions are being posted in the wrong subsidiary books. So these are errors of commission. These are all clerical errors. The errors referred to in question 38 to 41 do not affect the agreement of the trial balance because the errors are all made in the source books. So it doesn't matter, as long as the error is in the source book, the trial balance will still agree. Though it is an error and has an impact on the gross profit, the trial balance will agree. Question number 44. Goods purchased from X for rupees 10,000 has been passed through the sales book. This error will result in what? Is it an error of principle? Will affect the trial balance? Will not affect the GP? None of these. Okay, so this is not an error of principle, it is an error of commission. It will affect the trial balance. It will not affect the trial balance because the error has been made in the source. Error has been made in the book of prime entry itself. So it will not affect the trial balance. Statement C, will not affect the gross profit, is a wrong statement because it will affect the gross profit. It will artificially inflate our gross profit because a purchase has been shown as a sale. So answer is none of the above. A bills receivable of rupees 10,000 from X was recorded in bills payable book. This error is A, an error of principle. No, it's an error of commission. It will affect the trial balance. No, it will not affect the trial balance because the error is in the source. It will affect the profit. No. D is the option. None of the above. Question number 46. A purchase of rupees 10,000 has been wrongly posted to the credit of sales account but has been correctly entered in the supplier's account. Okay, so this is not an error of principle, will not affect the trial balance is wrong because this will affect the trial balance. A purchase of 10,000 has been wrongly posted to the credit of the sales account but has been entered correctly in the supplier's account. So when we make a purchase, we will debit purchases and credit the supplier's account. But here, sales account has been credited and supplier's account has also been credited. There is no debit. So this will definitely affect the trial balance. The debit side will be shorter than the credit side. It will affect the GP because the sales is getting inflated, and so the answer is D, none of the above. Next, question number 47. A purchase of rupees 10,000 has been wrongly posted to the credit of purchase returns account but has been correctly entered in the supplier's account. So when we make a purchase, the entry is purchase account debit to supplier's account. But what has happened is here, the supplier's account has been credited correctly and the purchase account has also been credited with the correct amount. The trial balance will not agree. The credit side will be more than the debit side. It will definitely affect the gross profit because we are understating our purchases and hence the gross profit will be inflated. So the answer is D, none of the above. Next, question number 48, the last question. A purchase of rupees 10,000 has been wrongly posted to the debit of supplier's account but had been correctly entered in the purchaser's account. Okay, so here there are two debits. Instead of crediting the supplier has been debited. So there are two debits. Definitely it will affect the trial balance. It is an error of commission, and it will not affect the it will actually I think we should change the option C. It should be will affect the gross profit. Okay, that's a wrong because this will not affect the gross profit because it has been correctly entered in the purchases account, and so the answer is D, none of the above. So with this we complete this session on rectification of errors and trial balance. So in case you have doubts, please feel free to get in touch with me. You can mail me your queries@greymatteracademics.com. So till we meet next time, see you. Goodbye.